Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, January 28th, 2008. Well, it's going to be one heck of a week this week, and it started off on a slow but positive note today, and we'll go into what's happening the rest of the week shortly that's going to make it a big deal. And I'm sure those of you that are into the markets pretty heavily, you know the Fed is coming out on Wednesday with their rate decision. The market expects 50 basis points. In addition, we have tons of earnings this week, tons of economic data, starting tomorrow with Yahoo with earnings. Then you have Google on Thursday. You have a mix of earnings in between from major tech companies that are sure to move the technology sector. Now you also have the Fed coming out Wednesday at 2:15 p.m. Eastern Time with their rate decision. And as I said, the market does expect a 50 basis point cut. Now, the market today had a nice little push up, which was extremely good to see following a down day on Friday. And it was almost of an inside bar day, and as you see here on the Nasdaq, you can see we did dip at one point a little lower on the tail, but for the most part we went up and closed in that whole bar from Friday on the sell-off. Now, the Nasdaq was up 23, almost 24 points. The Dow was up 176, and the S&P was up 23 and change. So a solid day across the board on the indexes, all of them closing at the highs of the day. But for the most part today, except for the very end here, we saw a very muted day in the markets. It was a kind of that hangover effect from just a wacky day, a wacky week last week. In addition, we also saw kind of the initial stages of a quiet market setting in prior to the Fed and the jobs number on Wednesday and all these other big numbers coming out for economic purposes this week. Now let's take a look at the Intraday Es Chart, and we'll flip to it right here. And you can see a general uptrend all day, but what I want to point out here is that it was just a very, very small uptrend all day, and you had little dips along the way, but for the most part, a positive move. But one thing I want to just kind of show you here, and we'll draw the trend in right here, you can see, for the most part, we stayed in the trend all day. And you can see right here, and just drawing the trend line. Now, there was a dip late in the day, and I'm going to touch on this here, as it was quite an interesting dip. But for the most part, you can see even here, drawing in this line, is that these parallel lines basically kept the market in check. All day trading in between them, just a continued move up. Now, the one situation that did come up here, which was pretty surprising, came into effect around 2:30, 3 o'clock today, where there was some significant sell pressure on the market, and you can see this dump out right here. 3 straight sell bars right to the bottom of that channel. But just like a good channel trading market, we quickly rebounded off that and went right back to new highs in the market. Now, the interesting thing about these moves, and you can see the up move here, and then we sold off a little up move, sold off. It was a very muted rally across the board. You saw volume being extremely light, and I really want to stress this, is that whenever, you guys know by now watching these videos, whenever you have light volume, you have to favor the upside, because it's just very easy for the market to float higher, especially in an oversold situation like we are now. Now, we did have the bounce late last week, we did have the sell-off on Friday, and today the light volume just kind of coaxed us higher for the day, closing the Nasdaq up 24. And you can see right here, look at this midday volume. I mean, this is almost pathetic volume-wise. Right down here, just no volume. Late in the day on the buying spree, you did get a little spike in volume, but considering last week, Tuesday, Wednesday, we did upwards of 4 million contracts a day on the ES futures. Today we did about 2 million. So it shows you the difference in volume. I mean, you doubled, a whole day you had double the volume on Tuesday, Wednesday, and even Thursday, heavy volume, as opposed to today, 2 million contracts traded. Now, the volatility was very muted, as I said, except for that late day pullback and then blast off, which took us to new highs. And it actually took the Nasdaq to the negative side of things right here at this point, and then we blasted to new highs. And it was interesting to see that, because the light volume seemed to sell off, and then right away buyers came in. Financials were very strong today. Goldman Sachs, we'll flip to the Goldman chart, up almost $5, and you can see the late day rally really having a push up on the intraday Goldman chart. Now let's touch base on what we think is going to happen here, because this is going to be really the key in everything, is that what do these economic numbers show this week? What do Google's earnings show? Because Google's going to be a big one, folks, for Friday, for technology. They're reporting Thursday after the bell. Friday, it will be absolutely big. Whether or not they're down big or up big, it could affect the market in a big way. So we will have to keep watch of that. But let's take a little look at the SPY and some resistance and support points on the daily. All right, right off the bat, we see here the SPY chart, and you can see the move off the lows here, and it's a very significant move. And then we had the retracement after that big time move. Remember, going back to Tuesday and Wednesday, the market was down at one point each day 300 plus points, even close to 400, with a major reversal on Wednesday of moving from minus 300 to plus 300 on the day. So you're talking about a major move off the lows, but when you consider the move down from here, it's a very minor retracement. And you always know that it's always like a wave pattern. You have a push, and then a pause, and a small pullback. Another push, small pause, and a pullback. So in very many situations, you expect this retrace, oftentimes to this 20 moving average area, and we are close to that, but we aren't right there yet. And then you expect a little pullback again, and then maybe another pause or another thrust down. And we'll continue to monitor that. But it's all going to come down to the Fed here. And you really don't know which way to angle things until we get that Fed out. Now, they do 50 basis points. That's what the market expects. And I happen to think that could bode well for the markets if they do what the market expects. If they do more, even better. Less, then you're going to have some issues out there. A quarter basis point, 25 basis point cut is not exactly what the market is thinking right now would be a good thing. The market wants everything in droves, in tons. If they do 50 basis points, a 50 basis point cut here, between the last meeting and this meeting, that'll be a total of 125 basis points, which would be the largest Fed cut ever, as far as I know. So in any case, keep that in close mind, is that you're talking about a major cut in the interest rate here, and it worries me, I'll be honest with y'all. It worries me big time because you're basically flooding the market with liquidity by lowering rates again, and the liquidity and the amount of money out there is what we got us into this issue in the beginning. So how does it make sense to solve an issue that was created by this problem, by low interest rates, by, again, just doing the same thing over and over again? To me, it's like a drug addict. You know, you don't want to deal with them going cold turkey and having the chills and freaking out, so you just shoot them up with more drugs. And in my opinion, that's the way the market is and how the market wants it, obviously, just like the addict wants it, but it's not the right way to handle it. But again, as we're traders here, and we don't care. Frankly, I don't care what the Fed does. I'll play the market either way. We'll make money either way in the chat room. Whatever the market gives us, we take it and we work with it. All right, in any case, let's go to the weekly here. All right, so again, you see that pull down, that thrust back up, and then a possible retrace or another move up in this area. I would expect. I do think at some point we touched this 20 moving average. Just like when we were on the upside, moving like this in the markets, and the 20 was below here, you had to come down and touch it. We did. And now on the downside, the same idea applies. You need to touch it before you can have another thrust down in general. And it's not far away at all. So let's look at the weekly here. All right, let's touch a base on the weekly, and I want to show you guys something interesting. This is the weekly chart of the SPY now, and let's connect these lows right here, and I'm going to show you something interesting, why we probably sold off on Friday. Okay, you have one hit here, right here. You have one hit, you have two hits, and then we broke here on the next one, and we went much lower. And then remember, we bounced last week hard. Look at where that bounce came right back to. It came right back to this technical level right here that I drew in. Now that's major resistance now. All right, whatever line is a support area, if it gets broken, it becomes resistance. So again, a move up on the weekly to this area would coincide on the daily with that 20 that I just showed you, and in many situations that would be a possibility. Now the other thing becomes, well, what if the Fed helps the markets out here? What if earnings are solid? We get back above this area, and then we can look for the next area on the upside. It could be in this area here. I'm seeing as a possible move up should we get back above. But again, ultimately, I do happen to think that we retest the lows. It's just a matter of when. Do we wait till this market bounces a little more and gets a little air under it before, or does the Fed disappoint and we just come down hard? And again, when it's in the Fed's hands, it's a very tough trading environment, and I will be mostly in cash going into that Fed meeting, as I think that is the wise decision for myself. Okay? Now let's look at the weekly on the Nasdaq just to see if we can see anything of interest. One thing here, let's draw on this line here. Alright, interesting. You have a trend line right there that I'm seeing. A possible retrace back up to that area would be where you'd want to sell into on the Nasdaq as well. Right into that line, as it is becoming resistance now that it was broken through to the downside. So the same thing applies. In addition, you guys should be able to notice this head and shoulder pattern right here in the market that broke us down. And pretty straight up, you got a shoulder, head and shoulder over here. And the way you basically handle it is you can take a line right there, you draw it to the lows from this shoulder area. You can kind of ignore this outlier right there, and right to these lows, and then look at the break and the amount of downside that there was in that head and shoulders breakdown pattern. So again, we'll have to continue to monitor this market, but there's a lot of interesting things going out there this week. Between economic data, earnings, and the Fed, it's just going to be outrageous. Keep an eye on Google. Google earnings are on Thursday, and look where it's sitting, right on the weekly, and this is the weekly still, 50 moving average. Let's go back to the daily and see where it's sitting, so we can kind of get a sense for that. But that is support on the weekly right there. If it can hold that support, that bodes well. We'll have to see. On the daily, not quite as pretty here. As you see, it has had a major breakdown, a little bounce back, but then came down hard today even when the Nasdaq was positive. So be very careful. Obviously, I never play anything into earnings. Have a wonderful day, guys. We'll talk to you tomorrow. Take care.